Good day, guys. How are we all doing? So, in this session, I'm just back testing the opening range breakout, the ORB. I've just came across it, so I thought let me just back test it, see if we can use it or add it as a tool to the way we already trade. So, in this back testing, I'm just simply using the M5. And unfortunately, I won't be showing any multi-time frame analysis to add the confluence. The only thing I can focus on for now, because of time, is the M5. So we'll just see if we can be able to get any breaks and clean entries with a risk to reward of 1:2. And we're backtesting price action from June. So today is the 6th of June, if I'm not mistaken. And we're starting off on the 3rd. Okay, so on the 3rd, what did we have? Oh, one more thing. I'm only backtesting London session on German 40, and I'm going to backtest New York session on Nasdaq. All right. So the 9 a.m. candle, the first 5-minute candle, we want to mark the high of that candle and we want to mark the low. Then we simply want to wait. Okay, this is from my own understanding. Of course, many people have got different ways they are using this and expressing it. So this is my own way of understanding it based on the lessons I watched. Okay, so the first thing you want to do is to mark the high and the low of the first 5-minute candle when London session opens. Second thing is you want to keep an eye for the first candle which breaks out of that range. So the first candle which breaks out above or the first candle which breaks out to the bottom, then what you're simply looking for is a continuation in this direction, and price can simply come back and retest as well. That's another possible move. So on this example, price retrace. So the way I enter this is if I see price retracing, usually stop loss goes above the candle which broke to the downside, which will be right here. But because our entry candle is the one which left the wick, in this example, my stop loss went above that wick. As the candle was breaking this inside bar, that green bar you see. So it's more or less like the same concepts I use for the main strategy I use, or the main strategy I teach. So inside bar, how do you trade an inside bar? We trade it using a breakout. So breakout, stop loss, a risk to reward of 1:2. And in 10 minutes, this trade would have played out. So this is scalping, by the way. This is also scalping. It's unlike the normal way we trade, whereby we hold for a couple of minutes to a couple of hours. This is strictly scalping. Okay, so this particular example, price pushed 1:2. As you can see, I think we actually go to 1:3, 1:4, 1:5. It was actually a good return. But since we're scalping, we're only looking for 1:2. Okay. The next day, okay, we're looking for the 9 a.m. candle. It's this one. And the low. Okay, you can even drag it into the future, because if you notice, sometimes price will continue respecting that range from the morning. So you can just draw it as far as you can, or just for that day, so that you can continue using it. So in this example, the break happened to the top side. This is the candle which broke out of my range. Now I'm waiting for a retracement. So price retraced back into the range, then pushed back up. So remember, I'm looking for anything which is going to break out outside the candle which broke the range. So this basically is my directional bias. That's all this is implying. Now I need reason to enter. So the next bullish candle which is going to break is what I'm going to use. And stop loss usually goes again, like I said, below your breakout candle. But again, in this example, we had to come below this last week. I prefer to put my stop losses below the last candlestick with the wick, below the last pin bar. So this would have been something like this. Going for a 1:2, this would not have reached 1:2, but it would have reached halfway. So at this point, it's now up to you because usually if price pushes halfway, we usually say move your stop loss to break even. Then see if price will still push up or it will take you out and break even, but you won't lose anything. So how you manage your trade at this point is all up to you. You can let your trade run to stop loss. You can let your trade run to TP. Overall, you still have a bullish equity curve. But anyways, that's what we're trying to find out. So let's say the first one is a win. This we're going to, let's just say it's a loss. Let's check the next one. So we've got one win, one loss. Okay, this day you can see I actually traded it, but I traded it using the way I normally trade. But anyways, here you can see this is our open candle, open candle. That's the low. And this is the high. All right, which is the first candle to break is this one. Right, so after we break, again, like I said, I'm always looking for the first follow through candle. And my stop loss has to come below this candle. But if there is like a lower move coming below this, then I'm just going to use that last low or the last week I see as my stop loss. Then I enter here, TP1:2. So on this particular setup, you actually see that I actually entered a breakout of this based on how we actually normally trade. So you can see these strategies, they just work like hand in hand. As long as you know what you're looking for, I feel like trading will become a little bit easier. So if you had entered here at the break of this candle with your stop loss below here, your 1:2 would have been somewhere there. So this one took a little bit of time to play out, but eventually it played out. So that's like what, 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, about 55 minutes, about 1 hour of holding. So if you're backtesting, these results show you that some trades will take 10 minutes, some trade will take an hour. So that's what you need to plan for when you enter a trade. If you see your trade moving, the way it's moving, if you just set your parameters and let it run, you should be comfortable with holding at least to an hour. So far, 1 hour is the highest time frame we've held. Okay, so that's 2 wins, 1 loss. The next day, okay, high, low. The candle which breaks is this one. Then we retrace. Here, I think I would have most likely considered the pin bar as an entry, stop loss above the candle which breaks, targeting 1:2. And again, this is another example where price only gets halfway, but it does not get to the 1:2 mark. Also, we could have been targeting the previous day's low. You see this red line on the bottom, and still price did not get to that area. This was on a Friday. So maybe let's count that as a loss as well. So it's 2 and 2, 2 wins, 2 losses. Our losses most likely, if you see, they are like break evens because price is moving our way at least halfway. So if you move your stop loss to break even, then it's actually not a loss but a break even. So 2 wins, 2 losses or break evens. Let's see the next day. Right, open candle. All right, this black candle is the one which breaks out. So most likely on this particular setup, most likely I might have attacked it like this. So I'm looking for the first sell candle coming outside this break. So we break, we retested, especially with this week. I don't, I might have put my stop loss outside this week, but my rule says outside the candle, which breaks out. So my stop loss might have been way outside the range also if I was strictly following that stop loss rule. For a 1:2, this also moved halfway and did not get to the TP. You can see the whole day just it actually go to the TB the next day, but I rarely hold trades like this. So either this could have taken me out. I might have entered it like this with a 1 to 2 somewhere here, like this, and this pullback up might have taken me out. This right here might have taken me out. But my rule or the rules for this is use the stop loss of the last or of the last candle which breaks out outside of the range, that opening range break. So stop loss has to be out here. If price retraces, usually these candles are here, so you can be able to put your stop loss in here. The only difference with this particular one is it came from all the way from the other side to the bottom side, and it was so big. So again, I guess that's a variation. So I don't know if we follow our rules, you can also call that a break even or a loss. So let's say we've got 2 wins, 3 losses, right? We're just going to keep track of that 2 wins, 3 losses. If I'm not mistaken, the next day, 9 o'clock. Okay, that's the high, that's the low. Which candle breaks the low? Do you guys see the candle which broke the low? This bearish candle here. After we broke, we retraced. Remember, I'm now looking for the first candle which is going to break. So since this would have most likely been solid at some point, I most likely would have sold right here. So let me show you how my setup was looking like. And one other thing is you don't have to doubt this setup. So as soon as I'm breaking the candlestick, which broke my stop loss above that candle with the 1:2, so my trade would have been looking like this. And price would have almost taken me out here, but it didn't. If I had not entered there, I would have used this pin bar here. That's a perfect entry here. Break of structure, retracement into a fair value gap. These are all other confluences besides the ORB, which I'm showing you guys. There's also many other confluences which you can use to take trades. So an ORB is just a tool which you can use. Sometimes, let's say you're not be able to pinpoint a fair value gap or something else. If you can be able to use this, you can still take a win. If you're able to use the fair value gap and the nameable candle, you can still use that as an end. You don't necessarily have to use everything you know. Just pick what relates to you and use that. So we've got 3 wins, 3 losses. Again, this was also almost a quick trade, 5, 10, 15, 20, 25, 30 minutes. Done. Okay, next day. Okay, we got 3 and 3 for now. Okay, this opening candle is so huge. Usually when it's so huge like this, I'm noticing on that particular day, there won't really be a trade during that time, during that London session. This is the second time I've seen this while I was backtesting. So the first candle to break out would obviously be this one. So if I'm looking for a continuation here, I'm entering right here with my stop loss right here. So let's see how it will be looking like. 1:2. Funny enough, the trade would have hit TP. The trade would have hit TP. Do you see that, guys, right here? 1:2. So our 9 a.m. open candle is this. The first 5 minutes will mark the high, the low. The first candle to break out is giving us the direction. That's the bias. Then the follow through candle, soon as it breaks this high, that's where, so as soon as it starts to turn green, that's where I'm trying to enter. If it comes back down here, as soon as the price comes back and breaks that high of the candlestick, which broke the range, that's where I'm also trying to enter with my stop loss now below this last low or below this low of the candlestick, which broke. Basically, that's it. So if this is a win, so we've got 4 wins, 3 losses. Okay, the next day. Okay, which one is 9? Okay, this is the 9 a.m. candle. Yeah, I'm glad we got this variation here. So on this example, this is the mm, 9 a.m. open. We've got the high, we've got the low. All right, so we're waiting for the first candlestick which breaks. So what I want you to see here is we've got this liquidity sweep here. Let's see if this high is broken. Let's see, let's see. Okay, I used the rope too. Okay, we will. Oh, it's actually my network. Sorry, guys. Okay. Now I have to scroll back. This thing just pushed us forward. I did not even check what day we were on. Sorry for the inconvenience, guys. Just going to scroll back a little. Okay, did we touch on this just now? I'm not sure now. I think we did. I don't recall seeing this purple line though. Let's just scroll back again. I think we should be close. Okay, yeah, this is the one we were on. Okay, so if you notice here, this price for me looks like it was already like in a downtrend. The reason I'm saying that is because you see we've got the previous day's low here, which is higher than where our price already is. So already I anticipate price to be in a downtrend. So overall, if I'm in a downtrend, you also just want to try and trade with the trend which you have on your higher time frames. So the 9 a.m. opened, this was the high, this was the low. This for me is just a liquidity sweep based off this and this. This is an order block. Price retests with the pin bar, leaves another order block. Price comes, retests again at the London Open. And already we've got like a market break of market structure here, or a market structure shift on the smaller time frame, starting all the way from here. So that's what would give me a selling bias. So with a selling bias, if I understand that this is a sell, I can even start selling up here. This breakout is just a confirmation that I'm right. Then from there, if price retraces, starts to retrace up, I wait for them to come and break so that I can sell. But in this example, you can see we're coming with so much more momentum after we already got confluences with a bias. So there's no need now to wait. Soon as you see that break, soon as you see this motion continuing down, you simply just enter with your stop loss above this high of the breaking candle, and we're aiming for 1:2, and that's the setup. So depending with where you enter, even if you enter the break of this low here, I think you'd still get your 1:2. Let's see. Yeah, there we go. You still get your 1:2. Price still comes back and still comes back to the TP area, which means it would still have been a good trade. So we were on, what was it? 4 wins, 3 losses. So we're on 5 wins, 3 losses. Okay, what happened? What's going on here? Is there a gap or what? Oh, there's a gap. Okay, we've got 5 wins, 3 losses. Okay, that's the high, that's the low of the London Open. Which candlestick breaks? I would enter this like this. I might put my stop loss here. I might put my stop loss just outside the wick. 1:2. I would also be aiming for the previous day's low here, as you can see, but this also is another example whereby you get a loss. Price simply comes back in the range. Even by the time they break out on the bottom side, they still come back in the range. So this is an example whereby you actually get a loss. There's literally no direction, which means even if we had sold, to still have been a loss. You get it? So if price is going sideways, usually you see that's where our system gets losses. So even with the way we trade, if the market is going sideways or choppy, if we don't see it before the entry and we enter, those are usually the trades which take us out. So we are on 5 wins, 4 losses next day. And you can see we're only trading one thing, same time, not looking for anything else, not coming back in the afternoon and all that. All right, the next day, opening candle high, low. Okay, which is the candlestick which breaks here. So again, this is sort of a special case. Let's see. Maybe this one is the one which actually breaks. This one here. So if price starts to retrace up first, you're waiting to sell when it breaks here, then the stop loss will come below this candle which broke or below the last week, which would be here. So in this particular example, the trade will be something like this, looking for a 1:2. Again, this is another one which takes us out. And for the rest of the session, it sort of goes sideways until we get to the afternoon. So we get like a sideways move until we get to the New York session whereby price sort of expands to the top side. So we are on 5 wins, 5 losses, specifically using the ORB, 5 and 5. Okay, this is the 17th. Okay, this one I marked it already. I think either I took it or I was back testing. So the high, the low of the London Open, the candlestick which breaks, price starts to expand to the downside. I don't know why my entry was up here. What did I use? Probably I used the M3. Probably this was my normal trading also. I'm not quite sure. But if you're using the break, or as this candle starts to go bearish, the setup will be looking like this. And your 1:2 would be somewhere here. Still a good trade though. So 6 wins, 5 losses. Then the next day, okay, the high, the low, the candlestick which breaks, the next one turns bullish. 1:2, and also targeting the previous day's high. So the setup might also have been looking like this, but your 1:2 would have been here. So again, this one, I don't know if you would call this a win or a loss, but if you are just letting your trade run to either SL or TP without moving this stop loss to break even when price is halfway, then this would also qualify as a loss. So 6 wins, 6 losses. The next day, okay, this is the wrong times here. The next day, 9, okay. Like I said, it's always good to just drag these lines all the way into the New York time because price can still give you an entry based off that London session range. So this example, I think is one we would actually have had a loss. This candle breaks out, we come up. As we are breaking out here, that's where I'm actually taking my sell. And probably some of these sells could be avoided if we are using multi-time frame analysis. Because remember, you also want to start with your higher time frame bias first. So this one would have been a straight loss. Price came back above, but even when it came above, it did not follow through. Just went sideways before the trend eventually started to sell off in the New York session. So again, this is a loss. So 6 wins, 7 losses, if I'm not mistaken. Okay, the next day. right? Um, this is the candlestick which breaks, price comes back down. It is pushing back up. Stop loss below the candlestick which broke. Oh, I'm using the wrong tool. Um, there we go. We'll most likely also be aiming for this high, right? And also the previous day's high. So could be like this for a 1:3, but a 1:2 would also have been achieved on this particular setup as well. So 7 wins, 7 losses. Okay, this is actually the 9 a.m. candle. So here price actually breaks out to the bottom, comes back up. A lot of volume here. This is the first example we're seeing a variation like this. So how do you attack it? I think same rules as we are breaking above the candlestick which breaks the range. As long as you're continuing up, you want to enter stop loss below the candlestick which broke. Then here, let's see if we would have found our 1:2. Then yeah, we found it. So would still have been fine if you had used this pin bar for an entry based on another entry criteria, which is not the ORB. 1:2 would still have been achieved. So if you notice, I'm only saying 1:2. Why am I saying 1:2? Because we are scalping. ORB with the 5 minute is strictly for scalping. You can do the same strategy with higher time frames, but the higher the time frame, the more you're going to hold your trade. So 8 wins, 7 losses. We go to the next day. Okay, the high, the low. Okay, this particular one, with the way this price is moving, I think I might have gone for buys. But let's say I had gone for sells, it means I would have used this candle for my entry with my stop loss right here. Let's see how it would have played out. Stop loss, 1:2. Okay, almost good to 1:2. I don't know if you all guys would also call this a loss or a win, depending with where you would have entered here. I don't know if you call this a loss or a win. It's almost 1:2. So if I'm looking at this trade, I might have closed. If you were just holding and not watching, it could have been a loss. So sometimes price will get very close to your TP and it won't hit and it will retrace all the way to your stop loss. That also happens. So if you want to take this as a loss, so it's 8 wins and 8 losses. Okay, the next day. Okay, that's our candle. The high and the low. The first candlestick which breaks and we immediately get a follow through, which means we would have sold right here, stop loss outside the candlestick which broke with a 1:2, which would have been hit right here or aiming for the previous day's low for a 1:5 risk to reward. But with this, remember we're going for 1:2. But if you've got other criteria showing you that you can hold, you can always leave a runner and see if price will hit your TP. So again, we are holding to full stop loss or full TP. So this would have come back to the entry area and then still pushed all the way to the TP. So we've got 9 wins, 8 losses. The next day, Okay. Again, if you look at how this price is moving, obviously I would most likely be in an uptrend and looking for buys here. I would have most likely been looking for buys. It's just a continuation. I don't think I would have taken this because, like I said, remember, I want to trade in the direction of the trend. I would have most likely been targeting the previous day's high as a TP. So let's see if the buy would have played out. So this is the candlestick which breaks outside the range. If you had taken this, obviously you can see this would have ended in a loss. Same time, like 5, 10, 15 minutes stop loss hit. Usually, if we are wrong, our stop loss gets immediately hit. Price does not even go to the halfway mark. But if we are right, price usually gets to the halfway mark, then retraces. So let's see if we would have used this as an entry with a stop loss here, going for 1:2. Uh, it would have taken us out. Do you see this wick here? Right, so stop loss based off this low this week would have taken us out because our 1:2 is right here. But again, if I was watching here, then I start to see this, I might close my trade while it's here. That's if I'm watching the price as it plays out. But if I'm not on the charts, then this again would have been a loss. So we're just going to take it as a loss. So I've got 9 wins, 9 losses. I think I use a different entry criteria here. Friday 27. Okay. I was thinking that was the holiday. But anyways, price breaks out again. This is also a variation where we don't get a candlestick body closing. So on such scenarios, once you see something out of the ordinary happening, you don't want to just jump into a sell. If you notice, out of the 18 examples we've had, this is the first time we're getting a candle which is breaking, but with a wick. So once you see this, you don't want to trade. This entry was probably based on my other trading criterias, which is not the ORB, which is also showing that I might have had a bullish bias on this particular day. So I don't think I would have traded based on the ORB. Price would have eventually broken here, but again, I want to see a follow through before I even decide to take a buy entry. So if there is no follow through, no entry. If there is no candlestick body trading, breaking out of the opening range candle, no entry. Then again, you see price also went sideways until we got to the afternoon. Then it then expanded up. So you can see the bias was actually bullish from this. Then the afternoon session price just continued up. So in the afternoon, just for interest sake, this is the opening range for the Q zone session, the high, the low. This is the candle which breaks this green one here. The next one is a straight follow through, which means we're simply entering right there with a stop loss below the candlestick which broke. 1:2 right here, and your setup is done. But if you notice on this day, price literally continued pushing up. So sometimes you might get those setups which will give you a 1:10 risk to reward ratio. But the question is, are you going to hold all the way? Because you never know which setup is going to push up. You don't know which setup is not going to push up. So sticking to the 1:2 is most preferable actually. But again, if you've got a strong uptrend and your ORB lines up with the uptrend, you can also scale out at 1:2, then try to hold a runner and see how high it goes. So 10 wins, 9 losses. Next day, if you notice here, we've got the previous day's high right here. So I already know if price pushed up and it's coming back down, I'm already looking for sells. So these again, like I said, are some of the days whereby I already have a bias. So without even checking higher time frames, I already know what's going on just based off this line you see, which is the previous day's high. So the opening range low is this one. The opening range high is this one. The candlestick which breaks out here is actually this one. If I'm to correct this black line nicely here, let me actually do it. Right, so right there we go. If I zoom in, you can see this is the candle which breaks the ORB. Now, where does the stop loss go? If the stop loss comes here, there's a chance I might have been taken out before we go to 1:2. So let's see. Of which I also would have taken my sell after this retracement, which means my entry would have been a breakout entry here with my stop loss right above this high. My 1:2 would have been somewhere here. So this is an example again whereby sometimes price will do this. It will come take you out, still move in your way. So now it's now up to you if you're still on the charts, whether you still want to take a sell off this, because I'm sure on a higher time frame, that's a week. Probably on M15, we've got a pin bar somewhere here, most likely. And this is also a liquidity sweep. So would you be comfortable with getting back in so that you can recover your loss, or you'll be done for the day? It's all up to you. So we're going to consider this a loss. So we've got 10 wins, 10 losses. That's 20 trading days right there. The next day, okay, this is the opening range high, opening range low. Oof, this candlestick which breaks is so big. But nevertheless, our rules say if we break, we break. So it's so big in such a way that I would have this level as a point of interest as well, right? But at the same time, I still want to maintain my rules that if I break this low, I want to sell, and my stop loss now has to be outside the candlestick which broke. That's the only bad thing here. The stop loss looks like it would have been so huge. But let's see if the trade would have given us what we wanted. So also take note that we are trading towards the previous day's low. So for the setup to be valid, price has to break and retest, then continue pushing down. That's also what we want to see to confirm the sell. So our 1:2 would have been reached somewhere here. And these are just confirmations. This break, once we start throwing these pin bars here, a liquidity sweep here, we've got a fair value gap here. So this price is respecting this fair value gap. If we come back above, then most likely price will come take us out. But here price respected the fair value gap, came back below the lows, retested the lows, then price continued pushing down. So we had many entries here. You could have used the ORB, you could have used other criterias, you could use other criterias. So 11 wins, 10 losses. Right, the next day, opening range high, opening range low. We break and we immediately start pushing down, which means my setup would have been looking something like this. Right, again, this might also be one of the longest setups. You see, we enter the trade, then it decides to go sideways for quite some time. So we've got 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 5, 10, 15, 20, 25, 30, 35, almost 4 or 5 hours in this trade. I think it went all the way to New York. So again, sometimes you're going to enter a trade, it's going to play around your entry. So your trade will be blue, red, blue, red, blue, red, blue, red. This tests your psychology now. This will test your psychology. So best thing with this scalping is to just set your stop loss, set your TP, let your trade run. If you want to manage it, yes, you can. But again, just know that if you had moved your stop loss because here we were at halfway. So if you had moved your stop loss from here to here, then the trade would have been break even already in the shortest space of time. So how you manage this is up to you, but I would advise you to just set and forget. So we've got, what is it, 12 wins. Guys, I'm forgetting now. The last trade, was it a win? Okay, I've lost track. I think it's 12 wins, 10 losses, or 12 wins, 11 losses, something like that. Um, then the next day, which was a Thursday, 9. Okay, let's remove this. Oh, here you can already see I had the markings done. This breaks out. I'm looking for the first breakout out of that range. So I would have most likely put my stop loss here. 1:2. No, it did not get there. Almost, but it did not. Then it would have come back to hit the stop loss before coming back again down. So like I said, if you're on the charts and you see that your setup looks like it's playing again, you can still take the trade and recover the loss. But if you're just taking one trade and being happy with, content with the loss and closing your charts, then this would count as a loss. So let's just say we've got 12 wins, 12 losses. This was a bank holiday. The next day was a bank holiday. So most likely we would not have traded on this day. We would have not traded on this day, but let's just see what would have happened. Okay, first candle which breaks is this one. So if we are to follow our rules and say we're selling here with the 1:2 tight stop loss, 1:2, this trade would most likely have taken us out. But also try to see how your price action is just to your left. You can also use this last high depending with the distance in with the number of pips included as well. So if you check this distance and you see that, okay, from my entry to this last high, it's about 30, 37, 40 points. There's no reason to have a tight stop loss of like 15 points when you can still allow your trade to breathe while it's under 50 points. So 30, 35, about 40 points stop loss, while it's aiming for 80, that's still good. So it would have been best to put your stop loss outside the range and the trade would have played out. Almost hit the stop loss, but would have played out. So I think that's it. Now we are on the current price action. So we've backtested German 40 together. This is the opening range breakout on German 40 using the 5 minute. So we had 12 wins. If I'm not mistaken, it's either 12 wins and 11 losses, or 13 wins and 12 losses. So let's just say it's 12 wins and 11 losses. So we got 12 wins, 12 losses. If you see, our results were pretty much random. We were just following a set of rules whereby if an entry criteria presents, we just execute. We were also not following any multi-time frame analysis, which could have limited our losses on this side. But using the information which we got, okay, so let's say we got 12 wins and 11 losses. So if you're using a risk to reward of 1:2, which is the one we were using, and we are trading a prop firm account, which means we are risking 1% to make 2%, what would have been your results? So if we had won 12 times 2, it means that's 24% in wins. Then this is in wins, and we had 11 losses, which would have been 11% in losses. So overall, out of 25 trading days, 25 days of trading, we literally won almost half and lost almost half. But we were still able to end net positive. Profit accounts require from 5%, 6%, 8%, 10%. to win the stage one. So you can see if we had followed just this pair trading, just this strategy, which is the ORB, we could have still come out on top. If we were using 0.5%, you guys can do the maths and aiming for 1%. Okay, so that means we could have won what? 12% plus or minus, and we would have lost something like half of it or slightly under half. Let's just say half, which is 6%. So at the end, we would have still been positive 6%, which is still good. So I think this is something we can try on one of our accounts. You guys let me know if you want me to do it on one of our prop accounts, and if you want me to do like a series and recording all those trades and maybe sharing them with the paid community. Please do let me know, and I can do a series based on that. So due to time, okay, let's see what my time is. Okay, my phone was off. I wanted to also backtest Nasdaq. And on Nasdaq, it's going to be the New York session, which is the New York Q zone time. Okay, these things keep moving. Let me just remove them. Okay, while it's a wait for my phone to turn on. Oh, there's the time on the bottom there. 20:48. Okay, guys, just hold on for me. Just want to check something quickly. Maybe I might do a part two for Nasdaq. Okay, let's do a part two for Nasdaq, whereby I'll be backtesting Nasdaq. If you guys want to see the Nasdaq backtesting for the month of June, backtesting the New York session 5-minute ORB, please do let me know and I'll do a part two. Just let me know in the comment section. Just write part two Nasdaq and I'll definitely do a part two. So you can just write in the comment section part two Nasdaq, and I'm going to do an ORB backtesting for June on the 5 minutes during the New York stock market open. If you watched until the end, thank you so much. Enjoy the rest of your day. Good trading.